A lot has happened since Liberation Day, aka Obliteration Day, on the 2nd of the month. That's when Trump slapped tariffs on over 60 countries and called it a win for American workers. So, here we are. The national debt's hitting record highs, the tangerines putting tariffs on penguins and pausing them more often than a boomer trying to use FaceTime. Meanwhile, China, the second largest economy in the world, isn't showing any signs of backing down. And while no one's offering real solutions, let's rewind to a 2003 article by Warren Buffett that's more relevant now than ever. It's titled, "America's Growing Trade Deficit is Selling the Nation Out from Under Us." And it's both a bold warning and a practical proposal that we can't afford to ignore. Let me set the scene and contextualize why this article is important right now, in mid-April of 2025. If you're unfamiliar, Buffett is one of the world's most successful investors, renowned for his long-term value investing strategy and leadership of Berkshire Hathaway. Buffett's always had a knack for spotting a storm before it hits. In fact, he foresaw the looming economic troubles long ago. In his 2003 article, he warned us about the national debt spiraling out of control. But rather than just pointing out the problem, he offered concrete solutions. Let's revisit Buffett's words to see what we might learn from them today. He begins the article by saying, "The trade deficit has greatly worsened to the point that our country's net worth, so to speak, is now being transferred abroad at an alarming rate." Buffett goes on to explain that he hadn't invested in foreign currencies until 2002. But then, he and Berkshire Hathaway started doing so, essentially betting against the dollar. Why? Because he believed the US dollar might be losing value. He was observing US borrowing trends. From there, his concerns about over-reliance on debt began to grow. However, he hopes he's wrong, because a declining dollar would hurt Americans more broadly, outweighing any profits from currency trading. He gives a little metaphor of Thriftville and Squanderville, two parallel islands. Thriftville represents countries that save and invest. Squanderville stands for countries that overspend and rack up debt, like the US. Instead of borrowing through government bonds, Buffett imagines what happens when creditor nations start buying real assets, like land. Eventually, the debtor country loses control, not through war but through financial dependence. Here's the danger Buffett warns us about. When a country lives beyond its means, future generations get stuck with the bill. He says the US used to be like Thriftville, working hard, saving, and investing around the world. But since the 1980s, we've turned into Squanderville, spending more than we earn and selling off our assets to keep it going. Right now, we're running a trade deficit of about 4% a year. To cover that, we're selling off land, companies, and stacking up debt. And when that debt becomes too much, Buffett says governments usually reach for inflation, printing more money to make the pain feel smaller. But in the long run, that just makes things worse. For comparison, in 2003, the United States' total national debt was $6.76 trillion. As of March 2025, this figure has risen to about $36.4 trillion. So what's Buffett's solution? It's something called import certificates, basically a tariff that balances trade without crushing the dollar or starting trade wars. Here's how it works. For every dollar a US company earns from exports, they get a certificate. If someone wants to import goods into the US, they've got to buy those certificates. So to import $1 million worth of stuff, you need $1 million worth of export-backed certificates. The result? Imports can't outweigh exports. Trade gets balanced. Exporters make extra money and the US economy gets a boost. Effectively, many of the downsides of Trump's tariffs would be avoided by import certificates. Why? Because import certificates give countries selling to us great flexibility. It doesn't penalize any specific industry or product. In the end, the free market would determine what's sold in the US and who sells it. However, like tariffs, the IC plan works like a hidden tax on consumers. We'd pay more at the store, even though the economy might get more balanced overall. Buffett's transparent about that, unlike Trump. So that was Buffett's solution in 2003, but the man's full of good ideas. Let's jump forward a bit. In a 2011 interview with CNBC, Buffett dropped one of his boldest ideas yet. His fix: if the deficit goes over 3% of GDP, no member of Congress can run for re-election. It's simple, effective, and ruthless. Make politicians personally accountable for overspending. But let's be real, Congress would never pass that law. It's basically asking them to vote themselves out of power. I think I can draw out the lesson from Buffett's article by answering the following question. Do tariffs and Trump crashing the stock market really have to do with our import to export ratio? Answering this question is crucial to understanding the connection. The US trade deficit isn't just a number, it's a reflection of how much more we're importing than exporting. When we import more than we export, the money is flowing out of the country, often into the hands of foreign nations. This is where tariffs come into play. Trump's tariffs were meant to reduce this trade imbalance, but the way they were implemented often made things worse. Instead of balancing the trade deficit, they created more instability. Tariffs raised the prices on imports, and while that may have helped protect some domestic industries, it also made products more expensive for American consumers. Plus, by starting trade wars and raising tariffs on countries like China, it added unpredictability to the market, leading to stock market crashes and global economic tensions. Here's what Trump doesn't get. The US exports soft power, stuff like Netflix, Spotify, Google Cloud, financial services, software, subscriptions. China, they export stuff, physical goods, electronics, textiles, machinery. So when Trump slaps tariffs across the board, it's not apples to apples. Our exports aren't sitting in crates at the border. You can't slap a tax on a Spotify stream, but you can make everyday products more expensive for Americans. And that's exactly what's happening. Buffett's approach with import certificates, however, directly addresses the imbalance in a way that doesn't rely on unpredictable tariffs or punitive measures. Instead of penalizing specific industries, the IC system ensures that the dollar volume of imports doesn't exceed that of exports. This way, trade is balanced, but the market still has room to function without crashing every time someone disagrees with a trade policy. Now, to connect Buffett's ideas with what Trump's been doing with tariffs, I found a Reddit thread that really captures public opinion. I'm going to read through it with you. And hey, I'm no expert, just trying to learn like the rest of us. This Reddit thread was posted on r/value investing at the beginning of 2025, and it's basically a repost of Warren Buffett's article that I just talked about. Top comment says, Pure Gold does a fantastic job of outlining why balancing trade is so important, but politically hard to do. The IC idea is pure Buffett, much appreciated. The next comment, which I find very interesting, then asks, so it means in a certain way that what the Trump administration and Musk is saying about the trade deficit problem is true? Tax cuts for the rich and other government breaking shenanigans notwithstanding? Another Redditor then responds, there are deficits, of course, with the US being the world's leading consumer, but this isn't how you fix it. They're just using it as an excuse. Next person goes, exactly this. It's fucking stupidity on another level to think that the US has deficits with other countries simply because of unfair trade practices like trade barriers or tariffs. The US is at the core of the problem. They are the worst consumer society in the world. If you don't want these trade deficits, stop fucking buying all this shit from other countries. Other countries are only producing it because you're willing to buy it. It's like a fat person blaming McDonald's for getting fat. No one is forcing you to eat that shit. You like eating junk food so much, you suffer the consequences. Countries in Asia have the opposite problem and they suffer differing consequences. They're compulsive savers. That is why Japan has taken so long to recover from its lost decade in the 80s and 90s. People were being fiscally responsible and paying off debt instead of spending. That's why demand and consumption was dead for so long. Now, the US being the consumerist society it is, they've gotten out of every single recession by spending their way out of it. But what is the eventual consequence of this? Higher national debt and higher deficits. That comment had 20 upvotes, and I think it's a pretty interesting contrast between US and Japanese consumerism. The next person goes on to say, if people stop consuming, there is no demand for what they produce. Someone responds, it's okay to consume. Chinese consume, but they do so with savings, which means they've worked for it. But if you consume with credit cards, and then more credit cards, you're spending money you haven't earned yet. The whole US is basically doing that from people to government. Something has to give at some point. Right now, it's still okay because of many decades of goodwill, Post-war, there's credibility behind the US dollar and all the bonds they issue to fund their consumption and spending, from your hospitals to your entire public pay system. And we still accept your dollars to sell things we make with our skill and labor. But this credibility has been slowly eroded, and your election of Trump has helped erode it another level. To me, that comment explains that the US is Squanderville in Buffett's analogy. The US citizens and government are stimulating the economy through debt, but for that system to function properly, it requires trust and the good graces of other strong world nations and economies. The next comment takes it even further, explaining that China is like Thriftville. It says, the flip side of this is that the debt is lent by hardworking foreign countries like China, and the US slowly erodes that debt by printing money. So when the party finally stops and China and the other countries stop lending, as they see their asset, the debt, is losing real value, the USA will no longer have any debt to deal with, but will from now on have to work more and consume less to achieve balanced trade. But hardly a disaster in USA having received the benefit of 50 odd years of good living and light work. That comment alludes to something that Warren Buffett also said, which is that oftentimes in order to deal with the debt, what a country will do is cause hyperinflation and devaluation of the dollar by the US government. The next comment goes on to agree. It says, that's what I'm saying. You have to consume less and work more. Right now, the consumption is borrowed from printing US dollars, as you say, and that's sustainable because the US was the presuming trustworthy power and currency since post-war. But that doesn't last forever, because eventually the dude working hard in China is like, well, why am I collecting this paper money to give you all my good services and produce? Hardly even low-tech stuff now. And the answer is Chinese does it because everybody else accepts US dollars in exchange for their labor and services too, until they don't. The next comment says, and then there's this notion that the US trade deficit is so big because other countries are treating the US unfairly with trade barriers and tariffs. It's absolutely laughable. Letnick was on some channel and actually saying Asia is bad because they won't let the US export rice to Asian countries. Like seriously? Why the fuck would Asian countries buy rice from the US? Asian countries produce the best rice in the world. No one would buy rice from the US even if the tariffs were removed. And then he talked about beef. Again, Australia and New Zealand produce some of the best beef in the world. It's not a given that countries will automatically buy US beef over beef from other countries. If the US were to get every single country to reduce tariffs on US exports, the US would still have a huge deficit with most countries. The deficit would narrow slightly in many instances, but there's absolutely no way it would be enough to offset what the US spends with each country. Further, someone says, you pretty much hit the nail on the head. I'm always baffled by this trade deficit talk. I have always had a trade deficit with Amazon and my doctor, but I'm still better off because I don't try to be my own doctor or glue my own books together. Having control over supply chains may be important for long-term national security considerations, but other than that, we are always better off moving up the value chain and selling software rather than steel to the rest of the world. I think that's a good way to end the video. Thanks all for being here. Hope that you learned something. I definitely did, especially reading that Reddit thread. Have a great day.